friends. Today 7th of May 2025. Here the short analysis for German 40 or DAX 40. We are beginning the analysis by a very strongly technical fact that we have again, like NASDAQ, a fake or a false V pattern. As we can see here, we had a double top before the DAX40 started to break down of the impact of Trump's tariffs, and also broke the first very important resistance at around 20,190. At this price here, at 21,864, the very important commercials, the real kings, the real power men or power women, the supermen or superwomen of the markets, who really have the tremendous power to move the markets, started to sell DAX and German 40. Who are commercials? This is not Donald Trump. This is not the Chinese government. The commercials of the markets are the market makers who own much more money, much more financial power to move the markets. And if they move in one direction, sooner or later the markets will move to that direction. And the commercials are definitely short. At this level, they increased and they accumulated their positions. And we see after the first leg of the V pattern was complete at around 18,694. This is, well, the first profit taking or partial profit taking of the commercials, because the intention of the commercials is potentially to protect themselves, because they own the physical assets of the market, and therefore if they start to sell or even to buy a market, they are expecting, because they have incredible information network. Even the White House is not able of having those information network. So these commercials exactly started to take some profit. The second intention of them was to push up the market again to these levels, to today, where the FOMC meeting took place, and to sell the market. So here again, for those traders maybe who trade the news, always watch for the price first and never trade immediately after any news has been released. Why? Because we have first the move of the price, and then after a while, it can take some days, weeks, or even months, where the market tells you this news have been wrong or right? Therefore, the news are almost the bad advisors. And as we can see here again, and I published today 4 other videos, watch them too. Today, the speech, Mr. Powell said exactly and very straight and clear how the situation is. Number one, he is going, or the Fed is going to ignore what Trump is saying. Fed is going to ignore and to defy what the Congress is doing. Fed does his own policy, and his own policy is not to cut rates and possibly to hike the interest rates. What do some news agencies like CBS and Bloomberg are doing at this moment right now? they are spreading the fake news that Fed is going to cut interest rate twice this year, and that is a big lie. It is a very humiliating lie, and therefore I'm going to publish immediately after this video now the real Fed speech, the complete speech of Mr. Powell after the fund rate decision of today. Watch it. It is around 20-25 minutes, I think, and he never said it. Watch it and then judge your trading actions. What do? We have been selling the market also here. At this level, we took profit, we went long, and since 2 days ago and also yesterday and also today, we increased our sell and short positions again, right? So this is the breakout traders at this level buy the breakout because they are looking and following this trend. What is not wrong, because based on longer term they have the market technique concept or the so-called price action, higher highs, higher lows, whatever, and therefore we have a different trading system, or I have a different approach. I don't use, for example, the typical EMAs or typical indicators, what you all know, for example, RSI, 200 moving average or whatever. I use my own mathematical algorithms. That means my system tells me based on mathematic formulas. Of course, those indicators are also based on some mathematical formulas, but my signals are completely different, and therefore I get very early in the market and I get profit as soon as possible, and I reverse the trade, right? At this level, for example, if you want to see, for example, now the bears are already still short, for example, somewhere from here, or maybe waiting for this pullback to get down. And during this time, we have taken profit, and now we are getting back again, took profit of our longs and immediately shortened it. With other words, we sell the take profits of the long-term buyers, and we buy the stops of the stops of the long-term buyers. We go where they put their stops, we buy, we immediately get into the market, and therefore we have a very high success rate. So now, where is the price going to? And this is very important. The first target of the price is at around 21,664. Yesterday, because of some, and you need to know that a lot of US investors are taking out liquidity of the US stocks, getting into DAX and European stock market. And yesterday we had also the election of German Chancellor. It was, of course, very important for the Eurozone, for the stability of the Eurozone. And after the second round of Chancellor Merz has been elected now officially to the Chancellor of Germany, then the market stopped going higher, and therefore we immediately accumulated our sell positions. So what can you expect? The first is that the market can try, if today after tomorrow after, in some minutes, in about 10 minutes after Asian Open, if the market starts to make or building some divergences at around 22,460. It want to go a little bit higher again to 23,180 or whatever, even to come again to the near of the all-time high. And here you can expect of building permanent broadening patterns. A very important size or a very important sign that the market is building higher highs and higher lows on the same time. And then, you know, that's time the market wants to shift the trend to the other direction. Definitely, what can we do? The first recommendation is maybe you wait until you reach the high of the broadening pattern to sell it. If you are unsure, you can of course get in with a small size of the position, or if you see, okay, your risk tolerance is not too high, then you can wait until the market reaches this level at around 23,730, getting up, building a pull-up, a pullback, and then you sell this pullback, and instead of putting your stops here or here where you usually do, therefore go in or get in with very small size, right? If say, for example, you get with 1 or 2 or 3 contracts, here you put you sell your first contract, the market gets back to 60% of Fibonacci, you sell the second one, and after it's getting exhausting, you sell the next one, right? Don't be afraid if the market suddenly moves up. It is a trap, and that's a very big potential opportunity to sell the market, because then after it, the market will definitely go down, right? So therefore, the bias for German 40 is definitely a bearish one, because now the US dollar getting stronger, that will push the Trump government much more under pressure. On Saturday, we will have the next meeting, probably potential meeting with Chinese delegation, and they have not confirmed at this moment. Then we have also an unclear situation of the Ukraine, and alone these 3 factors are reason enough not to buy anything what you read in news media, right? So the very important point again, you wait until the price is somewhere around 23,430, or if you have lower risk tolerance, you wait until the price breaks below 22,530, makes a pullback, and then you sell the pullback, and your first target should be at around 19,840. After breaking it, the market will go to 19,297, then to 18,747. The next level will be at around 17,264. And that's it for today's analysis of German 40. If there are some changes, I will immediately publish a new video. If not, that means that the bias, our bearish bias, is still in charge and it will continue, so there is no need for any new publication, and you can then use your other second settings and setups to master your bearish setups only in bearish direction. Again, at this level where the market is at this moment, the potential of losing on bullish trades is much more higher, above 95%. That means if you take 100 trades, you probably will have 90 to 95 of those trades as losers, even big losers, because the market starts to sell very quickly, very deep down. So the potential to go short at this level is much more higher and better than being a bullish one. All right, so have a good time and have a good trade.